The price of nitrile latex could hit a record high this month. KAF Research analyst Nabil Zainuddin said in a note that nitrile latex price could well breach $3,000 per metric ton. It has already more than doubled to $2,810 per metric ton from its lowest this year at $1,300 per metric ton in April, due to tight supply amid the surge in demand. Looking at the current trajectory, he said the price could surpass its last peak of $2,910 per metric ton in April 2011. At $3,000 per metric ton for nitrile latex, he estimates the cost to produce 1,000 pieces of nitrile gloves would increase by 70% quarter-on-quarter to 120 ringgit. He added the price will continue to rise throughout 2021 and could only ease towards the end of 2022 once suppliers' capacity expansion projects are completed. There's no certainty as to whether manufacturers can fully pass on the additional cost to customers. According to Nabil, Hartalega and Kosan Rubber Industries remain the two most nitrile-focused players. He downgraded both from buy to hold, with new target prices of 14 ringgit 78 sen for Hartalega and 6 ringgit 51 for Kosan. Still, he reckons that the two are most likely to declare special dividends because their major shareholders have relatively high stakes in the company. The Malaysian retail industry recorded a poorer than expected growth rate of -9.7% in the third quarter, compared to the same period in 2019. This comes way below market expectations. Members of the Malaysia Retailers Association have projected the third quarter growth rate at -3.4%. The November 2020 Malaysia Retail Industry Report, compiled and written by Retail Group Malaysia, said the third COVID-19 wave and the second CMCO had dampened the spirit of Malaysian retailers, adding that there was still no light at the end of the retail tunnel. It said with strict social distancing measures enforced during the entire third quarter, shopping centres and retailers were unable to operate at full capacity. And although almost all retail sectors were allowed to open for business in the third quarter, wary Malaysian consumers were not shopping, leaving home just for basic necessities. The reduced take-home pay during this period also limited their purchasing power. RGM cut its full-year growth forecast from -9.3% to -15.8%. It projected a 4.9% growth rate for retail sales in 2021. The Malaysia Shipowners Association claims the cabotage exemption on foreign-flagged vessels performing submarine cable repairs has resulted in a monopoly by a single Singapore-registered company. That's why it supports the decision by Transport Minister Datuk Seri Dr. Wee Ka Siong to revoke the cabotage exemption. MASA Chairman Datuk Engineer Abdul Haq Muhammad Amin says the original cabotage policy needs to be reinstated, arguing that it would encourage a system of fair competition among Malaysian providers of maintenance and supply services. Speaking at a press conference today, Abdul Haq said Malaysian companies own a total of 4 out of about 50 qualified and certified cable ships worldwide that are being used for installation and maintenance. Therefore, he said it would be unjustifiable to say Malaysian companies do not have the capabilities to conduct subsea cable repairs. He added that cable repair costs will not escalate with the revocation of the current cabotage policy. The cabotage exemption was introduced by Wee's predecessor Anthony Loke in April 2019 and was aimed at reducing the time required to conduct repairs on undersea cables. Perodua recorded its highest ever single-day sales of 5,027 units on the last day of November. The car maker, which sold 23,119 cars for the whole of last month, says it has sold over 195,000 cars so far this year. Based on the sales momentum, Perodua believes it is on track to meet its 210,000 unit year-end registration target. Breaking down its November sales numbers, Perodua sold 6,295 units of the Myvi, 6,318 Axia cars, 6,224 Bezas, 2,617 Arus SUVs, and 1,665 Elza MPVs. Its president and CEO, Datuk Zainal Abidin Ahmad, says the sales volume is impressive given the challenging economic climate and new normal operating procedures brought about by the COVID-19 pandemic. He says the car maker's two main priorities at present are to ensure many of its customers can get their cars before year-end to enjoy the sales tax-exempt prices, and to further bolster the Malaysian automotive ecosystem with the company's economies of scale in these hard times. Renhill Utilities has been invited by MOF Inc. to undertake a due diligence exercise on wastewater and sanitisation company Indah Water Consortium. The Johor-based water and utilities firm is proposing to restructure Indah Water. The exercise will involve the disposal of MOF Inc.'s interest in the company to Renhill. In a board's filing today, Renhill said the due diligence exercise will enable the company to access information necessary for it to finalise its proposal. It said the review will not have any material effect on its earnings, net assets and gearing for the current financial year ending December 31st, 2020.